Hi, my name is Harris. I'm one of your podcast hosts. I'm also a lawyer at Treadstone Law. For most Canadians, buying, selling, or refinancing real estate, a lawyer is the last thing on their mind. That's unfortunate because lawyers play a vital role in the process. But what choices do Canadians have? Lawyers can be very expensive. Well, Treadstone Law offers resources to Canadians so they have access to the information they need. Whether you sign up for a live workshop or a mailing list, we cover topics to help you make informed decisions and avoid costly mistakes. It's advice you can start using today, and best of all, it's free. Visit treadstonelaw.ca/MAS offer or click the link below to get access right now. If you're looking to retain Treadstone Law, it's never been easier. Our entire process is online. From completing the retainer agreement to your signing appointment, everything is done from the comfort of your own home. We're your digital lawyers. The best part of it is that you don't pay anything when you're retaining our firm. Visit treadstonelaw.ca/MAS offer or click on the link below to retain us right now. Enjoy the podcast. Welcome to another episode of Hustle and Grit. Today on my podcast, I have Rob Townsley. Rob provides independent financial advice to ensure that every financial plan he prepares for a client is based on unbiased research. He values a client's trust above everything else, and once a client makes a decision to work with him, he continually works hard to deserve their trust. His primary goal is to ensure that all key aspects of each client's financial plan are addressed in a manner consistent with professional financial planning practices. Combined with his dedication to his clients, Rob's long-term experience in financial planning allows him to provide unparalleled expertise when helping his clients to increase their wealth, reduce their risk, and lower their taxes. Welcome to the podcast, Rob.
Hey, how you doing?
You know, it's I want to jump right in. I want to start off basically because you've got a rich history, and I know you are not just a mortgage broker. You've got like a good experience around investing in real estate, safe to say. I just want to jump in and say, can you give our listeners kind of a walkthrough of how you got into the industry? What brought you into the mortgage brokering industry? Was it something that you fell into? Was it something that you knew as soon as you knew that you were going to be working in something that mortgage was the way to go? What got you into the industry?
You know, it actually started back in 1996. I actually became a financial planner and got into it. And I got into that because of my mom's portfolio and the way it was being managed. And I seen some mistakes that were being done. I kind of started off with that, realized that a lot of people needed the help in the financial side. And then 2005, I actually got my mortgage license. And that kind of came down to clients walking into the bank, my financial clients, and they weren't getting the service or the rates or the advice that they should be getting. So I said, you know what, forget this. I'm going to get my license and I'm going to start doing it. What ended up happening was my mortgage license and that part of the business ended up taking off in a huge way. But because of the financial background, I was also able to show people how to tax structure things like investment properties and so forth, and started getting into that later into 2010, especially when the U.S. market crashed. Similar to what we're kind of seeing here, is a great opportunity started back then. And a lot of those clients that did it made like a wealth load of money buying into that opportunity when the market crashed. And now we're seeing that opportunity right here in Canada, which is amazing. It's really helping out. But yeah, that really kind of stemmed it off, and the financial background definitely makes a big difference.
Yeah. So then you were working at a bank. What got you kind of, or correct me if I'm wrong, you were working at a bank and then you moved into kind of brokering?
No, it's like my clients went into the banks. I didn't work at a bank. I used to be a restaurant owner actually prior in 1996. Most people kind of like, that was a big change. And I'm like, yeah, but you get the business background. Which sort of helps, right? And then took the courses and everything to get the CFP and everything on the financial side.
Yeah, I mean, mortgage brokering nowadays, it's more entrepreneurial than mortgages, because mortgages aren't mortgages anymore. I know people think that you could read a textbook and figure it out. It's not the case. You really need to know what's happening in the economy. You need to be a kind of a go-getter, and you need to be that yourself so you can advise other people of what they need to do with their portfolio, because it's easier to sit in an office and be like, oh, this is the lowest interest rate. But when you're constructing a portfolio, that doesn't make sense.
No, and that's the thing. A lot of brokers, even today, banks, they all advertise rate. That's what it's all about. What a lot of people are missing out on is the structure. and they have to realize if they're getting a good rate, they're probably also getting into higher fees. They're not getting the tax structures that they need. They don't have the flexibility that's out there. So really, it's about designing that mortgage around a whole financial plan and not just, one little
Yeah.
piece, right? And making it
Yeah.
work. And it makes a big difference.
No, and that's why if anybody comes to me and asks whether they should go to a bank or a mortgage broker, right? And you're taking it to the next step, but whether they should go to a bank or mortgage broker, I always say mortgage broker, just because a bank, if they're really good at what they're doing, those guys are, 5 years from now, when you have to renew, are not going to be there.
Yeah.
They just don't have all the products. Whereas a mortgage broker, if they're really good, they're going to be there in 5 years. That shows that they know what they're doing and they're still there. And it's a lifelong relationship, whether it's your first home, first investment property, whatever it is, you're building a relationship where, hey, I can go talk to Rob and Rob's like, okay, I know this is what you've got, kind of, right? And this is where you want to go. This is your risk profile. This is where you need to go. But financial planning, again, is something I feel like is desperately needed, and it's very lacking because, again, the next step is how does my entire house and portfolio fit into my overall, I think, increase in wealth? Is that like a wealth
Well,
development? What's the right language around that? You'd know better than I would.
you look at it, and most people, even stepping into retirement now, they're looking at their house as their nest egg for retirement because they
Yeah.
haven't got the RSPs, they haven't done the TFSA, so that house is their biggest equity, it's their biggest investment, and it's going to
Yeah.
be the biggest investment they ever make. And it's the same thing if they do rental properties. That's probably their retirement package or their kids'
Yeah.
education or whatever it is. But designing a plan around that, and we're seeing this one, it's coming up huge, but a lot of people are downsizing, trying to pull that equity, and you've probably seen this in your practice, a lot of the, oh, and I'm going to draw a blank on type of mortgages, but reverse mortgages that have been
Yeah.
coming have just exploded because people don't have retirement assets. So it's important that it's set up right. And that's where the banks, they don't kind of look at that. They look at today. They don't look at 20 years down the road and where's this going to take me? What do I need to do? And that's really sort of missing out. And I agree. We need
So,
more financial advice for this.
so do you help clients to kind of build that financial portfolio as well? It's not just about mortgages and real estate. Is it about the other end of the spectrum, which is whatever it is, mutual funds, equities, or whatever it is? Is that what you're kind of assisting as well?
Yeah, so I do assist on the advice of that and how to structure the RSP, spousal RSP, stuff like that. I've actually just recently sold my financial practice, so I partnered up with somebody.
Mm-hmm.
That's only because of time. Like, we do so many mortgages in here with our team that I didn't have the
Yeah.
time to actually, treat the clients the way they need to be treated. So we
Yeah.
brought on another financial planner in to do that for us, just because it is needed, and it all works as one package. So I sit down with them with the client, and here's what we're going to do with the wealth side. He'll do the
Yeah.
investment side, the capital gains. I've got an accountant that we're partnered with to do the tax structures. So it's also about working with the team, and we do have a full team
Yeah.
developed this to help every aspect of it. You can only be good at so many things, right? So
Yeah. No, I mean it's interesting because I speak to a lot of professionals in the industry, and you'd be surprised how many people don't actually know about how to move capital gains around, right? If like there's a lot of ways that you could defer capital gains, or even if it's not your residential home, there's a few ways, and you need to know. And a lot of people who are kind of in the investment side don't really understand how to do that. And I felt like even deferring capital gains, this is a very small topic, right?
mm,
There's so many other things that you need to know in order to grow your entire portfolio. It's not just about getting that next rental property. It definitely is. But at the same time, you're looking at your entire thing. So can you give us a kind of a rundown what it's like to kind of work with you? Do I reach out if I want to kind of if I need a mortgage? Are you completely remote, or do I go in person? Like, what's that kind of entire process of working with you for the first time, at least, if I want to take out a mortgage?
so I do work right across Canada. So most people don't know about that. So it is mostly remote. We do
Hmm.
webinars across Ontario and obviously other provinces. Usually the first thing is an initial appointment. We come in, we just sort of have a discussion about what your goals are, what do you want to do, what do you want to achieve, what's your current situation. Like, I don't even get into a mortgage application usually in the first appointment. for the majority of the people, because I want to set up a plan with them and make sure they're in front of the right people going forward, and then we move on, and then we talk about the mortgage, the investment properties. What do you like? We'll bring the team in, the realtors that would be responsible for that. But I'm usually in that process from step 1 all the way down to step 10, or we want to make sure that I'm involved in it. I want to make sure that it is working, and I've got a great team behind me, so I'm not too concerned about that, but I want to make sure all the parts are moving. And the biggest thing about us is we're about the communication.
Yeah.
And we want to make sure that stays in place, right?
Yeah, so I just want to drop this in now, and I'm going to drop it in again. But if any of our listeners, if you like what you're listening and you want to learn more about just creating wealth, I know Rob has a wealth webinar. I'm going to be providing a link either below or on the side. His contact information is going to be there as well, depending on where you're listening from. Again, it's either below or on the side. Check it out. I think it's always useful to understand what you're getting into well before you kind of actually make that decision. That's my opinion. So I'm going to throw this back at you, Rob. What's a good time to kind of contact you if I need to take out a mortgage? Is it like, and I'm just throwing this out there, 3 months, 6 months, what do you think is like the best time to reach out to you if I'm thinking of buying a property?
So, well, that depends on a lot of people. Normally I say 4 months, but I've had a lot of first-time home buyers that I work with too, or investment clients. Sometimes we won't actually do the purchase of that house for 2 years. It just depends on the structure. I'm not going to come in here and make you break your mortgage so that we can properly do the Smith maneuver. I know we'll get into that a little bit later, but it's, we got to do what's right for the client, and sometimes the timing's not today. So I always tell people, book in, have the discussion with me. We'll set out a little bit of a roadmap, and then we'll do it the right way.
Yeah.
But don't just say, oh my God, I got to get in the market, because it's not necessarily about that. You want to do it correctly. I've made those mistakes. I've got 8 properties myself, and I've had to liquidate some because I didn't do it right. And so now we want to make sure that people don't make that same mistake, right? And
and I think for a lot of people, I think it's personally think I feel like it's just getting the conversation started. I know there's a lot of people, for example, today that are, for right or wrong reasons, waiting for like the market to kind of get to the bottom, and then they're going to jump in right away and they buy it. And I feel like it's never that idealistic. First of all, if you know where the market bottomed out, is going back up, and it's going to go up much faster than it went down. But having that conversation started, I think, is incredibly important as to what they need to do in order to get their first, for example, investment property. But just to speak to that for a second, what do you see are the biggest mistakes for first-time investors kind of walking through or going through your office? Where is it like, are they waiting too late to figure out the financing? What's kind of the biggest mistakes that they make before that first investment?
I think 2 things kind of come in. A lot of people come in and they try to rate shop, and I think that's the biggest mistake, because they're missing out on the right product, so they're not getting the tax breaks. And I think the tax breaks are probably the biggest mistake, because that adds up to tens of thousands of dollars, right? Like if you start adding it up. And every time I say you're going to get an Airbnb, you're going to get into a rental property, ideally you want 100% finance that thing. And there's a way to structure and do that. So that's probably one of the largest mistakes. And the other thing is I don't think people do their homework and do the research. I've seen a lot, and we're going to see this probably coming up in the market even more. People aren't cash flowing on their properties. The numbers weren't run correct. And I put this on my website. Know your numbers before you make an investment, because quite often people come in and they think they're going to break even on this property, and about 2-3 months into closing, they're out $1,000 a month. It wasn't done correctly, and you need to understand that number going in. And there's nothing wrong. You don't have to always cash flow. It's no different than putting $500 a month into an RSP. You're doing an investment here. So, but understand it. And most realtors do not calculate. You can manipulate any number. I'm sure you know that. It works. A lot of these cash flow sheets I see come through my desk are,
they're far from reality.
Far from reality. Yeah, that's really, they look great on paper, but unfortunately, we want you to understand the true numbers going in. You're not going to probably cash flow in anything in Ontario if it's done correctly, but that's okay. You know what I mean? You're going to be way further ahead.
Yeah. No, I 100% agree that a lot of times when you have clients coming in, clients, and this goes out to all my listeners, you need to really do your homework, not even just in terms of cash flow. 100% agree with cash flow, but there's so many different types of mortgages. If you're rate shopping, it means that you don't know what a mortgage is, because banks aren't stupid. They know that everybody can go out and look at rates. There's different things. The devil's is in the details, as they say, right? And
Yep.
there's a lot of different options that you kind of overlook. So people, I find, okay, are willing to pay 200,000, over 200,000, what I think is a reasonable market value of a property, then try to save $15 on their mortgage a month, which makes
No
absolutely no
sense.
sense.
And there's a lot of things too. Some municipalities have different regulations. Some
Yeah.
don't. Some municipalities won't even allow an Airbnb.
Yeah.
So if you're buying that property for that purpose, and then you got in there, then all of a sudden you can't rent it.
Yeah.
So it's things you got to know, and that's like I said, we come in, we want to make sure that you're in front of the right people, so you're not landing into that trouble, right?
Yeah.
And
Yeah.
we're seeing the advertisements on Facebook and Instagram everywhere. Some of it's kind of scary.
Yeah. No, and I've seen a lot of people, and this is, I feel like, obvious to me at least, but I guess it's not public information or as public as it should be. But people buy lots and they feel like, you know what, I'm going to build something on here. And then there's a conservation authority that kicks in and says no. And they're like, hey, this is my land. I should be able to do whatever I want. But it's not like
No,
that.
you just bought a park, right? It's just
Yep,
basically
exactly.
no, everyone.
100%. Yeah.
So,
So,
but it's very common.
yeah. So I want to change gears a little bit. And I know like when we kind of had our first conversation over the phone, we spoke a lot about investments, and that's something that I feel like a lot of people, again, if they don't know about mortgages for their first home, investments is something that like or even I think less people have that information about, less people understand that a high interest rate could save you money. That makes no sense. So, and again, if anybody really wants to, because we're going to touch upon these topics, but if you really want to understand it, go check out Rob's webinar. Information again is going to be on the bottom or the side, depending where you're listening. But I feel like there's not a lot of information on rentals and how to approach it, how to approach a portfolio. So I just want to kick things off with asking you, is now a good time to look for property for rentals? Because the market is going crazy. Interest rates, everybody says, is going to go to the moon and beyond. There's a lot of people who are scared, who are on the sidelines. What advice would you tell them in terms of entering into the market?
So I use this in my webinar as a good example. So I bought 3 properties in Florida back in 2008 when the market crashed.
Hmm.
Advised a lot of my clients to do the same thing, like not necessarily Florida, but anywhere in the U.S. It was a great time to buy. Everybody was running the other direction, and we're seeing that right now. Everybody's starting to run the other direction, and everybody that did that back in 2008 are now like they bought these houses for 50, 60K. So you need to
Yeah.
understand the price points. They're selling them a year ago for 300. They did very well, right?
Yeah.
Are on the US dollar back in 2008. Now it's 30 cents on the dollar. You can't lose those opportunities. So are we seeing that opportunity now? It's no different. We're seeing our rates go up. It's pushing our prices down, which means now we're getting an opportunity to buy property at a lower value. And understand one thing, property at a lower value right now in Canada is not realistic because the shortage in housing is so bad.
Yeah.
This is just a blimp. So I always tell people this is not going to be a short-lived drop. This is going to come back up very quickly
Yeah.
when the dust settles, once we get a little bit through the recession. So right now we've got a 12-month, 18-month window of opportunity in front of us. So it is definitely there. Are we at bottom? Maybe not. Doesn't really
Yeah.
matter. No, because you're going to
Yeah.
be way higher than you were 6 months ago. Like
Yeah.
you'd be crazy not to get into it. The rate's temporary.
Yeah. No, I 100% agree with you. I mean,
Yeah.
I could not, like, I feel like people aren't really thinking, they're comparing it to the States where, you know what, when the market crashes, it crashes. The regulations are very different. It's easier to build houses down there. They're not taking in 400,000 immigrants a year, which is, that's the equivalent of the States taking 4 million immigrants a year. Can you imagine, like, the housing crisis they would have if they're taking in 4 million immigrants a year? That's the kind of, it's a little bit more, and I'm kind of guesstimating there, but yeah, 400,000, and we're already where we can't just go and build. It's very centrally planned, I would say, just because of hospitals or healthcare is centralized or education is
Yeah.
more centralized. So it's not easy. Somebody can't just get up and say, I'm gonna build 100 more houses. You really have to be working with the governments and all that stuff. It's not that easy. So it is exactly like, I feel like it's like a blimp. You're gonna blink and it's gonna be gone. So you gotta act like now.
Yeah, and the actual stats I think on that right now is 750,000 houses are needed in GTA alone,
Oh
uh,
wow.
just to reach today's demand. So that kind of gives you an idea. And what's the build? I think they've built like 100,000. It's not even close. So you get 10 years from now, and I tell everybody 2030, you're either a renter or a landlord. Make your choice, because that's pretty much what it's going to be. We're
Yeah.
turning into the next Manhattan, right? And GTA is pretty much landlocked because of the conservation,
Yeah. Yeah.
which is what drives the prices up here so high. So it's the opportunities there. This is probably something we're not going to see again for 20, 30 years, right? Is
I,
what was in front of us. So it's you kind of want to jump on it and don't let the rate scare you, because, like I said, it's temporary. It's going to come back down. It won't be 2% again,
yeah.
but it's not going to stay where it is.
But and also if we go up to 5, 6, wherever we are now, if we go down to 3, 3.5, you can always refinance your property and start paying less. But at least the amount you've committed to pay is less. Not like when interest rates go down, price goes up. You've committed to that purchase price. That's your mortgage now.
That's it.
Like
Yeah,
you can't renegotiate that.
yeah, exactly. That's the important part. Is what did you just pay for the property? How much is it going to? Guys, I always tell cash flow is nice.
Yeah.
Appreciation is where you really make your money.
Yeah. Yeah.
Um, and if you want to cash, and the other thing people forget too, it's an investment property. You don't have to buy in Ontario. There's great opportunities in New Brunswick. Alberta's got a totally different market. Their market hasn't even corrected.
Yeah.
It corrected 3 years ago. It's oil driven. It's not necessarily Canadian economy driven, right?
Yeah.
So and there's opportunities there that have been phenomenal. So you got to stop looking just in your own backyard and take a look and expand out. There's a lot of other great opportunities out there. It's
Yeah.
just what fits you and what are you comfortable with.
And I think that's again like just a lack of education. People walk outside and say, "Oh, that looks like a nice house. Maybe I should get that as an investment property." You need to kind
Yeah.
of look beyond the end of your street and see what else is happening in the country. Because I think we've had a net migration into Alberta. So there's more Ontarians moving into Alberta just because of jobs and all of that stuff. So their economy is decent, it's strong, it's growing, and that means that there's going to be people moving there with money, and you want to get there before everyone does. So that's one of those things where, again, you need to be surrounded by the right people. You have to have the right advisors who are kind of saying, "Hey, listen, are you looking at this or that or whatever it is," to ensure that you're constantly being challenged in terms of what you're thinking and where you
Yeah.
should be investing.
And we've bought up a lot in Alberta. That's where a lot of my money's actually been going out to now in investments. And it's no land transfer tax. Taxes are lower. A lot of immigration is going there. It's a much more stable market. I do believe oil's coming back, so that's another reason why.
Yeah, yeah, yeah.
And the rental market there is very solid. It's only going to go up, and it's only going to go up because of housing demand. It doesn't really have a choice. So and we're seeing that even now. So a lot of people are saying, "Oh, I can't afford to buy a house," but guess what? Rental prices are going up because everybody's thinking the same thing. So
Yeah,
you're only going to cash flow in a much stronger position, and if you
yeah.
can do Alberta, it's worth it. I think that's one of the spots, our hot spots that we've been looking at.
Yeah.
And
So, I mean, rental market's one of the strongest it's ever been. And I know you touched upon Airbnb. What advice would you give to people who are kind of looking into Airbnb, and you had kind of touched upon the fact that some people will buy a property and they don't know whether it could be rented out because of whatever local regulations, local laws. What are some issues that overall, again, would be something that people looking to invest in Airbnb, what they should be looking at, and how, like you also said something that was very kind of attractive, where you could finance everything 100%.
Mhm.
So, well, how can somebody finance 100% of a rental property? I felt like maybe I'm naive or misinformed again, but I always thought, you know what, rental properties always, you need to give banks lend out
20%.
less of the value than your primary residence.
Mhm.
So how does that kind of fit in? So could you just give us a few, like what people should be looking for Airbnb, and then how can we get like kind of 100% in financing for that Airbnb?
Okay, so you got two separate questions there, but I'll
Yeah.
go through the Airbnb one, because one of the things you got to be careful with, people get into condos, they buy them. Condos don't allow Airbnbs. They're buying cottages up north. Great money in cottage properties. The problem is they're starting to become party houses. So a lot of municipalities are stepping in and they're squishing the Airbnb. So if you have the Airbnb, you really need to do your homework. You really need to work with a professional. And I'm going to be something, I'll tell you, like I have seen some of the properties that have come across my desk and I thought this will never Airbnb out. And the thing makes a fortune. Like there was a townhouse in Winnipeg that is just doing phenomenal. And I'm like, why would somebody buy a townhouse in Winnipeg? And it ended up being a great property. So you don't know. And we actually have an Airbnb company that works across North America. Really good reputation. I mean, her name's Sarah Kirby, just amazing. But she will actually seek out Airbnb properties that are there for cash flow and appreciation. That's all she does. And then they take care of everything. It's a hands-off type of way of doing it, which is incredible.
So they manage it as well?
They manage it. They do everything. You see everything online. You see the bookings. And because the reputation is so strong, they get top dollar, and most of the properties, they furnish it. They do everything.
Oh, wow.
I didn't even think a company like that existed until 6 months ago. But what they've done and what they do is amazing. But you want to get yourself involved like that. It's an investment. You don't want to be online booking and cleaning it and doing all this other stuff. You just want your cash to come in, your property to appreciate. You want to know it's being taken care of, and then you move forward. And who cares where it is? So we're getting investors now in Canmore and Kelowna and stuff like that because now they've got a place to visit while still getting a great Airbnb income. So there's a lot of opportunity.
I mean, you want your money to work for you, so instead of just getting another job, because I feel like a lot of Airbnbs, if you make the wrong decision, if the numbers are wrong, you just got yourself another job, and it's another headache. It's not necessarily an investment. It's the same thing. Like you got your day job, you're doing your afternoon or your evening shifts just to make sure your Airbnb is operating properly.
Yeah, and so there's every investment you get into, there's always a risk side to it. You need to understand the risk side and what you're comfortable with. And then there's always the positive side. Unfortunately, everybody sells the positive side, and that's what you always see, but you got to understand where your risk would be too. 100% financing on the rental. And the reason why I say this is key, and this is kind of where the Smith maneuver comes in. Like our goal is I want you to pay your principal mortgage down to zero as close as you can. Like that's what our target is to get you to. But on the other side, we also want to pull the equity out from your principal residence. And we use that equity as the 20% down on a rental property. And it needs to be separated. So one of the biggest mistakes people make, they want to buy a rental property, they come in, they refinance their home, and they take that 20% out of the refinance. The problem with doing that is you just lost 20% of your tax break, which adds up to, like I've done it out, it's like almost 10, 15,000 a year.
Oh, wow.
In interest, right? That you could have been writing off.
Yeah.
So you got to be really careful with that. And what you want to do is you want to separate it. So we talk about the HELOC, how to break it down, how to lock in two portions, and how we do it for you in the proper mortgage structure. And what you want to do is you want to use that HELOC as the 20% down, 80% financing on the rental property, and now you've got 100% financing that you're tax deducting off your rental income.
And I just want to clarify this again I think. Sorry.
And I did blow through that pretty quick, but the webinar in more detail.
Again, the webinar details are going to be side and on the left, depending on where you're listening from. Definitely, because the Smith maneuver is not something that's like I would say it's simple but complex at the same time. It's simple for you because you're in the industry, but anybody who's listening, they're going to have a few questions because, and I just want to clarify that. And this is a very rudimentary question where, if you want to take out $100,000 to buy a hypothetical investment property. Smith maneuver is basically saying, hey, if you've got a mortgage for $500,000, don't refinance into a $600,000 mortgage because you cannot deduct the interest off of the $600,000 from your taxes. Get a line of credit, or could you get a second mortgage on there for $100,000?
A line of credit or a second mortgage. There's things of the structure. Think of it this way: you have $100,000 sitting in cash. Yeah. This is probably the best way to describe the Smith maneuver, but you have $100,000 sitting in cash. You want to go buy a rental property. Okay. But you've got a $600,000 mortgage currently on your principal residence. So what we would do is we'd say, okay, take that $100,000, you're going to go dump it on your mortgage. and then we're going to borrow that 100,000 back out through a HELOC. Now we've created the tax break on the 100,000,
Okay.
right?
Yeah.
And
Yeah.
that's typically how it's done. Any rental income extra you get, you're not going to dump it on the rental property. You're going to dump it on your principal mortgage, because we want
Yeah.
to release more equity as we go along.
Yeah.
So,
Yeah.
and then you can
So
reinvest.
again, I'm sure there's like a lot of details with this, and somebody would have to definitely speak to you, especially if this is the first time doing it. Again, I'm going to have Rob's information on the side or below. Um, so the other thing that I wanted to ask then, and I asked everybody this question, it's a crystal ball question. Where do you think rates are going to be in 6 months from now? So rates 6 months from now, and are you a variable? Are you recommending variable or are you recommending fixed? What's kind of your perspective on that aspect of rates?
We're going to see how, right? I did a prediction 3 years ago that rates were
Yeah.
going to go up and we were about to go through high inflation. And the only thing that was going to stop it was going to be a pandemic. 6 months later, a pandemic hit. And then
Are
people
you
are coming back
serious?
on my webinar and saying, "You predicted the pandemic." And I was like, no, that's not me. The rates went down. But I do think rates are going to come up. You're going to see 6.5%. I wouldn't be surprised to see fixed rates come up around 6% by spring, and then
Yeah.
gradually come down. It's going to take a while, probably to 2025. Fixed or variable? I'm still variable or short term. So 1, 2, 3 year max rates. A lot of brokers don't like selling them because they don't get paid on them. So I'll
Yeah.
warn you. So you have to kind of ask it. They don't put them on the table. But you don't want to lock yourself into anything too long, put it that way. I wouldn't want to get into a 5 year rate right now at 5.5 or 6%,
Yeah.
and then see the rates start coming back down in 2 years, right? Because
Yeah.
then you're in the losing position. Your penalties are going to be high. So,
Where
ride it
where
and be prepared, or short term rate.
so where do you think rates are kind of stabilizing? Where do you see them over the long run? At least over when I say long run, it's not long run. It's more 5 to 10 years. Where do you see rates kind of coming back to?
Target rate on a fixed is we're going to be around 4.5%.
Okay.
That's where it should be. When we were sitting at 2.5, or even down to below the 1, that wasn't normal,
Yeah.
right? So, but expect around 4.5%, probably in the next 3 to 5 years,
Yeah.
and then plan on that. That's where we should be at in a stable, healthy economy, right?
Yeah. No, yeah. And funny thing is I feel like a lot of people, a lot of the younger demographics, they may have not gone through the 80s, or not, forget the 80s, even like the early 2000s, 90s, right? You had like interest rates were still at a 4%, 5% wasn't a huge thing. Now, like recently, we saw even commercial rates go down to like 4 or 5%. And I thought, what the heck? This is like incredibly cheap money, which meant that a lot of people were making stupid mistakes. I felt like the prices for properties was not reflective of exactly kind of what we spoke about. They're not cash flowing. People are just buying it. Hopefully it appreciates, and it's like because rates are so low, everybody's running, and therefore it's kind of a mob mentality, and you're only making money off of the appreciation, which isn't a bad strategy under a healthy environment and healthy economics if it works out. But when it's like something that you go from 3, dip it down to like below 1%, and everybody just kind of runs for it, it's going to create all these unintended consequences that when rates are coming back up, I question why people didn't see that coming and why they're saying it's so high, or they're panicking. This is not high. This is actually, I would say, normal. This is a good thing to see in my perspective.
Yeah, it is. It's healthy. You need to see it on the bank accounts and everything else. And that's where I think we're going to see our market correct the most, is when a lot of these renewals start to come up. I'm starting to see a lot of investors cash out now just because they can't carry the properties, because they overpurchased, right? Low
Yeah.
rates, all the rates have gone up. It wasn't done correctly, and it comes back down to it. You have to understand your numbers again and where you should be. And the good thing now, you don't cash flow. 2 years from now, you could be cash flowing. Rent's going to be higher, rate's going to be lower,
Yeah.
and you paid less for a property. So, you
Yeah.
got to look a little bit down the road of what you could be, right? And that's why I think this opportunity now is getting stronger, and it's even going to get even stronger in the next 6 months.
Yeah, no, 100% agree. 100% agree. You know what? Thanks for coming on. I definitely, there was a lot that we kind of covered. Again, if any of my listeners want to watch Rob's webinar or reach out to him, I'm going to have his contact information below or on the side. Again, depending on where you're listening from. I think that this is a great time to invest, and you need to be ready for the right opportunity. You can't find the right opportunity, right property, and then start looking for financing. And so, if
Yeah,
you guys are looking for financing, get in touch with Rob. And whether it's in Ontario or anywhere else, it's a great time to start a conversation. I always say start a conversation. It's always free. It's good to do your research before you jump in, and you're not they kind of running around with your head cut off. Thanks
yeah,
for coming on, Rob.
absolutely.
Any last words? Sorry, not didn't mean to cut you off. Any last words?
No, it's fine. Check out our website. We do put up a lot of information on there. Webinar links are always up there. The next dates are always posted up there too. It's www.townsley.ca. So it's pretty easy to find, and I know you'll post it up there later. So,
Yep.
all
No,
right.
definitely. Everything's going to be available. Everybody should just check it out. Always, again, I know I keep beating this. This is because you know what? Before we started this podcast, I even told Rob I'm personally in the real estate market. I think that's how good it is. So that's why I'm encouraging everybody to start doing your research. So definitely reach out to Rob. Thanks for coming on, Rob.
Appreciate it. Thank you.